Good morning and welcome to the Early Bird. And here we're looking at the Dow Jones on a daily chart. In fact, we're looking at two charts here, and both daily, both of the Dow Jones. And this was in 2008 here. And we've talked about this chart before, but we'll have another look at it and see where we're up to within the pattern. And so we're both at 11,500 here, both medium levels, and we're both in the same time zone here as well, the August-September thing here as well. So there's a lot of same situation here. So you can have a look at this in your own time more so, but what I wanted to point out was this basically this three-wave pattern up here that we've been looking at. This is the latest here, of course. So we've got this three-wave pattern up through here, the same as we've got this three-wave pattern up through here, creating the first high up here. Yep. Then we've got this retracement level here, this high here, the second high, as we've got this second high here. The only real sort of difference with all of this is that this is just slightly a bit lower than this one here. But same pattern. So we've got that low, that high there. We've got that one there and that one there. So this is the one that I'm interested in. We had 3 or 4 days down here, and we've had 3 or 4 days down here. Now, last night we had a move, nice strong move up to above 11.3 here, up here somewhere. So it's a bit like this move coming up through here, as in like 2 or 3 days as well. And one of the things that I want to point out here is that, you know, this retracement level here is very high, really, isn't it, when it's compared to this one here? And, you know, this one here is not small either. This has come, you know, way back up to the past 61.8 mark here, more closer to the 76 here. So that's been really high here, and this one here has also been really high as well. We thought yesterday that, you know, that before this rally started down here, we figured that it could really be a very small retracement level coming into the, you know, 10.9 here, or it's going to be way up here at the 11.3, and that's been the case there. So I just think that's interesting, and I think that we also need to look at what happens next as well. So in this particular case here, we've got that rally up here, which we had last night in ours over here. And then we've got that, you know, that dramatic sell-off as well here. So that's what we could kind of, you know, we'll look at anyway. And then, but we'll look at that in 5 waves down through here. Yeah. So we'll look at 5 waves down, 3 waves back up, and yet again, another reasonably high retracement level as well. And then we've got this basically strong move down through here. So that's like the 3rd wave, the 4th and the 5th. So we're basically looking for 5 waves from that point down to here. And then that massive push back up through here again. Okay. So, you know, there's a lot of this is really emotional here. What was going on here were probably the same discussions in the same offices that were going on in here. So, this is what we can expect, really. So just as a bit of a possibility and a roadmap. So, yeah, have a close look at that. So we can expect the next period to be down through here, but then, you know, a lot of sharp rallies back up. So a lot of your trading would have to be you know, you need to have orders set up in front of the market, and that's where the daily robo can come in, or the 4-hour robo, or the hourly, whatever time frame and whatever degrees of levels that you're working within. You know, that's what you need to get very clear on. There's no right or wrong way to do really anything, I guess, but you need to choose a time frame, then build your rules around that, and move on from that point, you know, with your money management and so forth. But have a good look at this here. So you've got a good idea of what's sort of happening, because this is what we've been sort of using, and it's basically what's been unfolding. So we can pretty much keep our fingers crossed and see how we go from there. Now, I also do want to point out that that I would only turn bullish in the market if the 11.5 became a nice solid support here. That would be a good enough reason. Now, if we were going to go long, yes, we could have gone long down through here. I understood that. But I didn't want to get anybody trapped in case we had a sort of a short situation here, and I certainly don't want to go chasing the market long at this point here. That would be crazy, wouldn't it? You know, because you're basically buying into resistance there. So try and keep the wild horses of emotion under control, and we'll, you know, if we are wrong, well, that's fine. It's we can take that sort of battering on the ego, but it's more a question of getting the market timing right. So if there was going to be a bullish pattern coming through here in such a way, we would see something like this here, and this is what we would be looking for here. We'd be looking for something like this, and then we would be looking for a move up on there, and would want to find, you know, somehow find nice solid support on there like that. You know, that's what we'd be looking for. We'd be looking for that, and then our market timing would be here, not here, because this is the risk where it can fail from this point here. It could just fail from here and move on straight down here. So that's crazy to do that, isn't it? So don't get emotionally swept away. This is not a honeymoon, but the marriage will start over here or will be bearish here. Okay, so this is the Nasdaq here. So we've got a very clear 5-wave structure coming to the downside here in 5 waves. And then we've got this A and this B and this C wave back up to here. Now, it is possible for the S&P 500 and the Dow to have another push up to this point here and then roll over. I've done some work earlier this morning on the S&P 500, and that's certainly possible. For the Dow, it does seem that rally is possibly done and dusted there. So we had a target of, well, anywhere from 10.9, I think we said, to 11.3. Technically, it would be that top point there that if that was breached, then this wave count would change, and it would change in the way that this wave 4 here would be fine, but this 5-wave structure would have to be the wave 5 here, and that would be the end of the rally. So it would have 3, 4 and 5, but this wave 5 here, it does seem a little bit small. You know, normally when you see a big correction like this here, then you would have the same to the downside as well. So you can go back in history and have a look at these big sort of patterns here. When CBA was at $40 in the bear market, doing a big sideways pattern here. Even bigger than that, you might see Woolies doing the same thing going over years. You know, so to have this small little corrective pattern here, I mean this impulse wave here, you know, it can satisfy the 5th wave as 4 and 5, but I don't know, just a bit small. But you know, we need to look at it, and that's why we said that if that's the case, we still wouldn't go long unless we had support further up here. So at the moment, we'll just consider this the wave down for wave 1, back for wave 2, and down for wave 3. Now, I know on our S&P charts, S&P 500, we've got a wave count of down for 1 here, then an A and a B and a C wave to here. Now, that's fitting as well. That fits as well. But the only thing I don't particularly like about that is that this particular structure in here is 5 waves in here. So it doesn't really give us a good B wave as such, as in terms of down for 1, an A and a B and a C. So, but we'll just stay with this situation for the time being anyway. Not that it makes a big difference. What we need to work out now is can we short here, and what should we be looking at that point there. So this morning, this is the Dow Jones as well. So it's only when this top here would be taken out here that, you know, that we would consider moving further to the upside. This has all occurred since there, but I had been counting these little stars here, just counting all these little structures in through here, and to get this point here. So, but anyway, it's rolled out of bed here, so we'll see how we go here. So what we'd be looking for now is we'd be looking for 5 waves down, basically, if you want it. This is a 15-minute chart, but if you go into a 5-minute chart, but we'll be looking for 5 down, 3 up, 5 down, 3 up, 5 down. So basically looking for impulse waves to the downside through here. This is a natural sell-off at after a big run. Yeah, so most traders know that that it's an emotional drive there. So, but at the same time, we need to consider that this pattern here is still a bullish pattern. That's possible, but it also can be what it is here. So when we have a look at the S&P 500, for instance, I've labelled this in both ways. I've labelled it in terms of an A, and also up for one as well, back for a B and back for two. And then we've gone up for one, back for two. And this can be counted a couple of ways, but I've counted it in a bullish pattern here in terms of three, back for four, and up for five here. Now, once it gets up to here, that can be wave C or wave three, then back for four, and then up for five. Now, if it goes up for five here, then we've still got plenty of time, so we wouldn't be missing anything because it would come up to somewhere like that. If it moved above this high here, then we would have then this move down here that we were talking of being wave one down here would be wave five and would be going further up at that stage. So that 1,220 there, and check that on the cash market rather than the futures market. But once that looked like this here for wave three to here, wave four to there, wave five to there, then we would simply have an ABC correction, which could take us back to 61.8% down here like that. Maybe not so far back, but could be. And then we would be working further up from that point there. But, so there's what I'm pointing out here is that if this was going to be the case, we have plenty of time because we would be looking to go along over here, but not over here because this is where the risk is over here. So at this stage here, we will stay with the market being a corrective rally, and that would also be the same for the UK market as well. These tops here would have to be taken out for us to turn bullish at that stage there. So we'd be looking for five waves up to there, an A and a B and a C back into here, and then building up from there. But I don't think that's the case because, once again, this five-wave structure here is a little bit small in compared to what this is. This is a corrective pattern and a continuation pattern, and this should give us much more downside than what we're seeing just here. This doesn't really add up in terms of ratio and proportions. It doesn't have the right look and feel about it. So we'll treat this as a rally into this point here, in line with the Dow Jones as well. And that's the same for most commodities as well, but they've got their own patterns. We'll get to those in a minute. The Australian market here, considering this a rally as well, I don't think this is done and dusted here. It may be. I need to pull this apart a bit further into here, but this could be the top of the wave 3 here, a wave 4 here, and a wave 5 to move up here to cover that gap over here, which is just below the 4150 there. So we still may get another push up here on that there, but then that should just about satisfy this particular structure moving up through here. So traders today can use the subgroup 2 level here. If this finds support on here, then fine, move up here, but I'll be taking the money at the 4100 here and waiting for support to come in there, and then climb and claw your way through this situation up here. But the price has been built in through here, so if this does go up and retest the 41 there and then come back and get stuck under the 72 here, then you use the 65 as a trigger to start shorting it back at that stage there. So very short trading ranges around this area here, and if it does move up through here, then we'll cover that gap there. And if it also covered that gap there, but still got supported on the 4130 here, the top of subgroup 1, well, then you would look at the 72 here, this old high up through here, and that would be about it at that stage there. So yeah. Yep, okay, nothing really more to be said about that there. It's the same thing as well, not to worry about that too much. Okay, the gold market. So we're also considering, this is very much a base metal sort of pattern through here. in terms of copper as well. So this here, we're considering this a rally and a wave 4 rally like we were talking about yesterday. So once this is complete here, we should see this roll back over and continue down here based off this being a third wave down through here. And that would be the same for silver as well, coming back to $30. I thought I had a chart there, but perhaps not. The oil market as well, we've basically had 5 waves down through here. For wave 1, we're coming back to wave 2. The wave 2 61.8 retracement level, I think, comes in at 85 there or thereabouts. So we can consider the 85 obviously as the resistance there, and we will see some resistance here, and we'll try and see, well, the market will try and gain support on the 83 here, and if that's the case, we can push higher into this supply level here. So the 86.50 would be about it at that stage there, but this will just follow stock anyway. And the copper market here, as you can see, there's no doubt that this is a strong third wave down through here, and this is a wave 4 rally, and the 350 here would be about it, and this is also a bounce off basically off the 300 here as well. So we should see it, pan out within here and then sort of make its way back down through here again as well. This rally here would have also influenced ASX 200, but that would have been lining up with the indices as well. But it certainly would have influenced the Australian dollar as well, as it rallied back towards $1 as well, and we'll look at that in a second. But this is BHP here in the US, so we've seen it obviously gap up through here, back up to 72, but it's locked under the 72 here. This is also a bounce off the 65, the medium level here as well, so that should be about it through here. We'll see if this line in the sand because that's what it is. It's just, it's gapped down through here from that level there, and it's coming back and retesting that. So that should be about it there, and we'll see how we go here. I mean, with BHP, we certainly wouldn't turn bullish unless we had support above the 80 there. That's that's where we're at with that situation as well. And yeah, so that's that. The US dollar index here, I was looking at this a bit closer here and looking at a pullback into this support region over here, and I was counting it as an A, B wave and a C wave coming down through here in terms of down for 1, back for 2, down for 3, back for 4 into here, and then down to 5 here, and then pushing off there. But that could also be counted slightly different as well, in terms of that can be the low already in place there. But I'd like to see it tested a second time, like just a bit, a bit further in there. So, and that will the opposite to that would be the obviously the euro. The euro move up through here has been on lower volume. That's a daily bar here on the euro. So I just want to point out that that lower volume there. But we can see support from here and from here at the 34 mark here. So there is support there. So it'll be a battle between demand and supply up through here. And just looking at that a bit closer through here, this is the pattern that we're looking at here. This would be an ABC correction moving up through here, just as the US dollar index is moving down. This rally here would also line up with the S&P 500 and the Dow Jones as well. So you need to bring those into the equation. Have a look at the wave count on the euro on our charts for the wave count on here. This is just a trend line of resistance coming through here, which has held the market through here. But these moves here are still positive in nature here. Yes, that if we get 5 waves in here, have a look on the 5-minute chart. If we get 5 waves here, then we'll get 3 back up, and then we'll get another 5 here as an ABC. But that ABC can turn into a larger 5 waves to the downside, and that's what you'd be looking at through there. But first of all, 5-minute chart, do you have 5 waves down to here? If so, then you'll get 3 back, then you'll get another 5. So, and if that's the case, then that's probably the top sitting in there at the moment. And the Australian dollar's the same as well. We talked about it coming back into the possibility of coming back and retesting the $1, which is natural, and that's what it's doing there. It's likely to fail there, but I do have to say that there is no supply here at this stage with it, but the wave count is quite fitting in terms that this would be a third wave down through here, and we've got a nice 5-wave structure coming in through here. So have a look at the wave count on our charts for that there, but that should be finished at that point there for wave 4, and we should roll over 4 there. Now that did move a little bit high in terms of the 38.2 retracement level, but it doesn't matter because you have to work with the numbers. The wave count will get skewed around large numbers, but this should move with the S&P 500, the Dow, and copper as well. So we'll see that there, but there can be another push up through there. I haven't really pulled that apart through there as such, but I did notice this is it here on a 5-minute chart. Was looking at this this morning in terms of 1, 2, 3, 4, 5 to here as wave 1. So then what I wanted to point out here, that you can see that this was nice and strong here. You know, like there was nice big sort of movements here, but from this point here and this through here, it's all the ranges have been starting to, this low here is overlapping this one here, this one has got support here. So the beginning was strong, the middle is sort of weakening here, and then we've got a really sort of choppy wave structure in through here. So the trading ranges have been getting shorter up through here and struggling a little bit, but that's only natural coming into, you know, this area through here. So what you need to do now is you need to count to see if you get 5 waves down through here and 3 back. So if you get 5 down here and you get 3 back, then you'll get another 5 down through here. So it does appear that there is weakness in through here at the moment, but I guess overlapping the top of this one here, because we've got this 1, 2, 3, 4, 5 here, overlapping here would probably create the top there. So that 98.72, once that becomes resistance there, then we can say that that top's pretty much in play there. Okay, well that's pretty much about it really. So we just had to hang on to our hats while that rally on the US markets played out, and that's done. And we just got to watch our markets play out as well in terms of the cash market, maybe pushing up here to cover this gap through here. It'll just depend on how the Dow futures get sold off during the day in our time period here of how we go through here. So yeah, hopefully that's, well, depending on what side of the market you're on, but for our short trades there, we'll see how we've managed to stay in or get clipped out, and looking at the next move to the downside. Alrighty, well, good morning and good luck.